All right. Hey everyone, Mark here. Welcome to another Greenbridge Investing Market Analysis. This is a live stream, so I want to welcome you all. Thank you for joining me today on Monday. We're going to take a look at Bitcoin, the nice interesting move that we have here. We're also going to take a look at the US dollar and the stock market and look at some relationships here. Now, if you're new to this, let me just tell you now, any stock or market that you'd like to see, whether it's an altcoin or whatever, please share it in the chat now. So once I complete my portion of the analysis, I can go through the charts that you want to see. Okay, so I don't want to spend 3 hours like I do because I tend to talk a lot. I want to try to keep this around an hour. So please share your symbols in the chat now. Okay, so with that being said, let's get this thing started. All right, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, we're going to begin with Bitcoin, but before I do, I just want to say one thing real quick. This is all something that we get a lot of questions, so I should go over it real quick. If you're new to Greenbridge Investing, first, if you like the video, please press the like button. It lets me know that I'm doing a good job. Also, register for the channel here so you get an email notification every time we do one of these or when we stream Talking Markets, which is on Tuesdays. Also, check out our website, greenbridgeinvesting.com. We have a swing trade signal service by text, by email, portfolio management ideas by email, and a chat room where we're sharing a lot of market insight information, which is very important, especially on days like today when there's a lot of action and it can be confusing at times. So we have a 6-month and a yearly package. The 6-month is $2.99. Okay, that comes to $50 a month, and the yearly is $3.99, which comes to $33.25 per month. Okay, the reason why we look for the advanced payment is because in order to benefit from our strategies, which tend to be more longer term oriented, you need to be in this at least 6 months. You can't just join for a month and then say, oh, their trades weren't any good, so I'm just going to quit. Meanwhile, some of our best trades take 2 months to play out at times. Okay, we'll talk about a couple of those. But anyway, we also have a free plan where you get the trade of the week email, which we send out every Wednesday, basically. That's for free. We send it to everyone, and you can get a sense of what our swing trades are like. Okay, so with that being said, just wanted to let you know we have a 7-day free trial, which there were some questions in our free chat room about that. If you sign up, okay, as an active investor member, you automatically begin a 7-day free trial. And if you stay on board, then you start making the payments. Okay. If you have any questions, just email info@greenbridgeinvesting.com, and we'll be happy to take care of you with that. Okay. Again, thanks for listening. All right, let's get into the situation here with Bitcoin. So cool. Hey Gabriel, good to see you. All right, DJ. Hey. DJ, I was going to bring you up, actually. I was going to bring you up. DJ's been a long-time member. Speaking of being with us for at least 6 months, DJ's been with us, almost 2 years or whatever. And DJ shared a very interesting piece of information in our chat room earlier today. He said that on days like today, with this type of move on Bitcoin, he would have been very reactive before he met Greenbridge, before he got involved with us. He would have been very reactive, searching for news, not knowing what to do, and all this and all that, just like many others are right now. But instead, he's prepared, he's calm, and he's looking for buying opportunities because he learned from us and our strategies, right? And a number of our members have learned a ton from the insight that Andrew and I share in the chat room through these streams and through the swing trades that you get. Okay, so hey, everyone, good to see you. HS, nice to see you. Adnan, hey, nice to see you. Okay, cool. So let's talk about this Bitcoin situation. But again, like DJ was pointing out, he would have been reactive, okay? Like many are right now. Just a few days ago, you watch my previous streams. What have I been saying? These levels are high risk levels. I've been saying it over and over, and many of you were probably bored of hearing me saying it. I talked about it at 32.5. I talked about it at 40.5. Okay. Now, the news doesn't see this coming, or, the news is not out to help, by the way. The news is not out to provide any type of really helpful information. They're just after attention so that they can justify ad revenue and all that kind of stuff. So I hope by now that you're immune to the news and the hype. I know our longer time members are because they've learned. But if you're new and you're still like looking for information why, trying to answer the question why or fill that void to know because you need that sense of control, the news is the wrong place. Or any type of mainstream information that you get out on the internet publicly for free is the wrong place. It's a reflection of the herd mentality. The markets are not logical. We refer to logic as it's human nature to go to logic. If this, then that, right? We need to have a reason for things. Markets are highly random. There's no room for logic. Markets move on for irrational reasons. So here we are, right? We talked about this. We actually sent out a swing trade idea on Saturday night. Andrew sent it out. It never activated, okay? Which is a nice example of how our buy stop method, which is a filter that we use, we make the market work to get into the position, prevented another stop out. Even if we had taken this trade, it would have been a 1% loss anyway, because we only risk 1% in these type of situations. We rarely go to 2 to 3%, especially at such unattractive levels. All right, so let's talk about Bitcoin now and what the levels say right now. Because again, this is about, people again are looking for logic, looking for reasons, and what's next, and what are the experts saying, and all this other nonsense. All this information that you're looking for can be answered by a chart. Now, a chart is a reflection of the herd mentality if you know what to look for. People want math and facts. They want precision. Emotion is not a precision. Human emotion is not a precise thing. So as it unfolds in the markets, it's going to be messy, right? That's why there's no exact level. I talked about 40.5 and went slightly higher, right? Bitcoin made a high of 42,000. And then now here we are messing around with these levels. Okay, fine. So let's talk about going forward. What is reasonable to expect? First thing I want to talk about is mistake number one. And that is people step in too early and they step in too big. Yesterday, when Bitcoin had this first red candle, okay, I'm going to make that real big so you can see it. This first red candle here, I was getting questions. People were sending me questions on TradingView, and a lot of times it takes me a while to answer them sometimes because I just get so many of them. And, I try to answer them and I get more. Anyway, the point is, people are asking me, you think it's going to go to 32,000? Do you think it's going to go to 42? Where do you think it's going to go? And I said, look, it's really up to the candle, right? The candle will determine if it takes out the low, which it took out the low. If it takes out the low, it's probably going to go to 32. Here's the thing. People buy into this pin bar, all right? And there's a lot of gurus. There's a lot of fakes out there, or maybe they're not fakes. Maybe they are sincere, but they just don't have the experience. And they're sitting there watching their 60-minute charts or their 30-minute charts, which is okay if you're a day trader. But if you're going to use that time frame to expect to navigate this time frame, you're going to have problems because you're going to get in too early in these situations. Basically, you're taking a day trade signal with swing trade risk, which the chances of getting stopped out of something like that are very high. Now, by the way, while I'm on that topic, I want to ask the group a question because there's a little delay here. It's going to take a little while before the answers pop up. But here's my question to you. And if you don't know the answer, you can say, I don't know. Many of you are going to know because many of you are members of the chat room. Can you guys tell me, guys and girls, because Irina's here, can you tell me the difference between a swing trade and a position trade? What is the difference between a swing trade and a position trade? Now, if you're someone who doesn't know the difference, you should think twice about risking real money in these markets. Okay, so back to Bitcoin while I wait for those answers. So people get in too early, and then it's followed by this nasty candle right here. And now either people are getting stopped out, or worse, they go into hope mode, which, they don't have a stop, because if real Bitcoin's strong, it'll come back, Bitcoin had a high of 42,000 and a low of 3261. That's 12,000 points in just a few days, okay? Now, if I had asked you a few days ago, are you willing to risk 12,000 points? Most people would probably say no, all right? And that would be a correct answer. But then why are you buying at 40,000? Why are you buying at 39,000? Why? Because someone else said to buy it? That's the risk that you're facing. Now, here we are. So now that the market has made this move, we are at the 32.5 area, okay? So here comes some answers. Let's see here. Gabriel says position equals long-term, like investing. Yes. Hey, Alice. Swing trade. DJ says swing trade, days to weeks, months sometimes. Yes. Gabriel, swing trade, shorter term. Yes. Mario says, oh, hey, Mario, nice to see you. DJ says position trade, months. Yes. Well, of course, DJ knows, and you know he's been with us a long time. And Gabriel, you got it, and I'm sure many other of you know. But if you don't know, the reason why I asked that question is because there are many out there who don't know, and they don't even know to ask, or they don't know how to differentiate. You must know the difference between a swing trade and an investment, and you cannot mix the two. The reason is the magnitude of risk between a swing trade and the magnitude of risk on a position trade are completely different. Swing trade, of course, can have smaller risk. A position trade, since you're in the market longer, has much more exposure and has much greater risk. So you need to understand how to compensate for that. And that's the key point. Okay, now, so back to Bitcoin here before I ramble on for 3 hours, and DJ won't stop me because he likes to hear me talk for some reason. Okay, so 32.5, right? We're there now. People are asking, is this the place to buy? Well, the location is attractive. So look, there's 3 things when it comes to swing trades. Let's talk about swing trades here. All right, which is basically a couple of days, a trade which is a couple of days to maybe a few weeks, possibly months, right? We've had stock swing trades that go on for 2 months before they reach all 3 targets. Now, as a swing trader, we have the first thing I like to look at is trend. Well, the trend is pretty obvious on Bitcoin. All right, it's bullish. Anyone that says it's bearish now is wrong. This is just a normal, healthy retracement, a correction of the broader trend, which is bullish. All of you know that, I'm sure. Now, the second question is location. Are we at a more attractive location? The answer is yes, we are. 32.5 is a support. It's a pullback from the broader trend. We have step 1, criteria number 1 has been met for a swing trade long. Great, location. Does that mean we buy? No. We need a setup and we need confirmation. 2 more steps. The setup basically comes in the form of, there are a couple of different types of setups. It could be a single candle, like a pin bar. It could be a series of candles, like a double bottom or a failed low, right? Each situation, there's no way to predict what the market is going to deliver. The thing is, it must deliver something that we can measure risk off of. And we cannot measure risk in this situation right here, right? All we have is a large bearish candle. Price is near the low of that candle, even though it's fooling around to support. This momentum can continue. And if it continues, we're looking at 27.5, whatever, right? 27.5 is the next support you could see on my chart here. 27.5 is not just a recent support. It also is it's a retracement level based on the entire Bitcoin move from the March low to the recent high. So if 27.5 is taken out, if that's taken out, that will signal a change. And this is a very important thing that many are probably not talking about. If we take that out, we are likely in a consolidation period. Okay, and that's we've mentioned it a number of times. Wave 4 for Elliott wave. Wave 3s are usually very dramatic, very strong type of trend waves, especially the 5th wave of a wave 3, which it's very possible that that's what this is, a 5th wave of a wave 3. I can count 5 waves in that, right? So when wave 4 comes, the wave A of 4 is often very dramatic. Right now, this is pretty dramatic. So the key point for me, or the point where I start to change my thought process as far as trend or consolidation, will be a break of 27.5. That area. If it's cleared, we close below it. That doesn't mean bearish trend. It just means broad consolidation. Now, we're going to talk more about this tomorrow on the Talking Market Show, about wave 4s. But just to give you an idea, a wave 4 of this magnitude can linger for months. That's what you need to keep in mind. If we go back on Bitcoin, we go back and we look at consolidations, right? Like here, I'm going to show you a smaller magnitude wave 2. So this is wave 1 back here from March to May. And then basically from May to about October, well, I'd say maybe about August. That's wave 2. That's a consolidation from May until August. That's a number of months, right? So wave 4, especially of this magnitude, it's possible that we can see this thing stuck in a consolidation or in a range for 3 to 4 months, right? If that's, you know, the type of wave 4 that we get. It could be shorter, it could be longer. There's no way to know exactly. The thing is, you need to be prepared for what is likely to come. Now, wave 4s are very difficult to trade. If you look at a standard Elliott wave, you know, the standard wave count, the impulse wave and then the corrective wave, your standard corrective wave will have 3 legs, okay? But that doesn't mean that the market is going to deliver just a 3-leg corrective move. You may get a compound correction, or where you basically get a couple of corrective moves linked together. That's where things become very confusing. So what does that all mean for us? What that means is we want to pay attention to the levels, and if we clear 27.5, we have to adjust our expectations. So if I take any swing trades, if I send out any swing trades, you know, based on patterns that develop around that level, well, my targets are going to be adjusted. They're going to be, you're not going to see any 50K target on my targets. On target 3, it's not going to be 50K because I'm not going to be anticipating a new high if we clear that. Now, if we don't clear that and we stay above 27.5, then a new high, basically taking out 42,000, is possible, because then wave 4 is less likely, or a broad consolidation for a lingering period, you know, for a number of months, is less likely if we stay above that 27.5. Okay, so just a key level, put it in your notes, and we have to see what kind of stability we get. Now, that's the swing trade perspective. Okay, let me talk a little bit about investing here for a moment, and then I'm going to look through the chat to just see, you know, if I have any questions in there. So, as an investor, you know, let's say, look, you're not interested in Bitcoin over a couple of months, you're interested over a couple of years. Okay, well, when you get dramatic pullbacks like this, this is a buying opportunity. But here's what you have to keep in mind. It's just a better price than buying the high. It has plenty of potential to go lower. You have to have an open mind and be open to anything. People that go on instinct, which, you know, someone recently told me their friends are buying stocks on instinct, and I know how that goes. That's the herd mentality. You can't go by that, right? So the levels will give you a point of reference, even as an investor. So 32.5, you could say, okay, I'll take a small bite there. We go to 27.5, I'll take another bite. We go even lower, which is possible. I mean, the low 20Ks is possible. Remember, I'm not bearish on Bitcoin. I'm just respecting the momentum and what's likely. Those are places to buy. You want to buy when people are banging it out, when people are getting margined out, when now everyone's coming out and saying, oh, Bitcoin's no good anymore, blah, blah, blah. I mean, what happened to all that nonsense a couple of weeks ago or a week ago? Everyone was saying, oh, if insurance companies buy just 1% of their blah, blah, blah instead of treasuries, Bitcoin's going to go to 100,000 next month. Where's all that nonsense? What happened to JPM with, oh, Bitcoin's going to be at 140,000 by next year? Well, yeah, well, it went straight to 30,000. Okay, that's what I'm talking about. So you can't go by any of that nonsense. That's logic, and then of course that logic goes into our mind and it filters through our biases, and we think that we're in control. We think we know what we're doing. Oh, well, if JPM said it, it must be good, and all my friends are buying it, and strength in numbers, right? Right. It's the opposite. So anyway, before I go on a rant on that, all I'm saying is, as an investor, you want to buy into weakness, but the key to doing it correctly is by being small, okay? So you have to start out with a target allocation. Depending on your financial situation, it's going to be different for everyone. So let's just, for example, say you have $10,000 that you want to invest in Bitcoin. All this $10,000, I want to buy Bitcoin with it. Okay, my net worth is much bigger than that, but I want to put $10,000 into Bitcoin. Okay, well, now you can break that $10,000 up, and you can break it up into much smaller units. And you could say, all right, well, I'm going to break it up into $1,000 allotments. That means that you have 10 trades or 10 purchases that you can now make. Okay, you're not going to put all 10,000 in at one price. You're going to buy it at different levels, and you're going to average in. Out of those $1,000 allotments, you then can cut that in half and say, okay, well, at much riskier prices, I'm only going to invest $500. Okay, and if it gets beat up, then I'm only going to stay with the $500 allotment until, and if I get some really, really low prices, I'll do the $1,000 allotments until you fill up your $10,000 goal, okay, until you're fully invested. And now you've averaged in. So a situation like that, that type of buy program can take a couple of months, depending on your frequency of your trades. But my point, I'm going to sit here and give you a whole plan on that right now, but the idea is to have a plan and have an organized schedule as an investor. That goes for stocks too. But in this Bitcoin situation, I know a lot of people want to buy into it and go, oh, this could be a buying opportunity. Right, but you have to buy small because we don't know. And if it goes higher, again, you're buying a small allotment if it goes higher as an investor, so who cares? Right? You're averaging in. You want to get an average price. The advantage to that is if it gets really beat up, you're not going to, the pain won't be as harsh on you. You're less likely to make an emotional decision, okay? And you have the choice to stop buying, right? Because since you're not fully invested, let's just say you're 30% in and you still have 70% of money waiting to go in. You can hold off and wait until the market stabilizes a bit and then continue your investment plan. So that there's a lot of protection in that. Okay, by the way, I have to go through the economic calendar. But anyway, okay, so real quick. Yeah. So Irina says dollar cost average, right, to your long-term investment plan. Right. So what I just described is just a basic idea of an investment plan. You must have one. You can't just go by instinct or I'm just going to throw in $1,000 here or I want to invest 10,000. I'm just going to throw it in. That's an unwise thing to do. It makes you vulnerable, especially to the herd mentality. And in these situations, like what if this gets worse? Everyone's like, oh, buying opportunity. What if this thing goes to 25K? And you just threw 10,000 in, and that 10,000 becomes 7,000 in just a matter of hours. You're not going to be happy, okay? And then you may get scared, and then you turn on the news. Oh, JPM just cut their target from 140,000 to only 80,000. Oh no, I better get out now, right? It's all reactive nonsense. It's irrelevant to what's actually going on. News only amplifies the herd mentality. And it can cause a reaction, but news is not information to make decisions off of, okay, for those of you that are new. Those of you that have been with us for a while, you know that. I've said that about 10,000 times. Okay, anyway, so real quick, before I continue on Bitcoin, do I have any questions? I just want to cover two perspectives on Bitcoin. The swing trade perspective, which again, I'd love to buy some, but just there's no reason to buy yet. I'm not going to buy into this ugly candle. There's no setup, there's no confirmation. I can't measure risk. No trade, okay? And as an investor, hey, this is a great spot to put a tiny portion of your plan to work, all right? So like again, if you have $1,000 allotments, half of that, $500, why not? If it goes lower and lower, so your $500 gets cut to $400, what do you care, right? It's a long-term investment. So I just wanted to give you those ideas. Let me know if you have any questions. Also, some altcoins we'll take a look at. Now, before I get into the altcoins, let me just do this, okay? Take a look at this. It's important that we do this every time. The economic calendar, especially if you're into Forex or if you trade stocks and stuff like that. I had someone in the free chat room ask about, they want to sign up for Forex, our Forex program. And the thing is, Forex has been really lousy since November, right? Since the presidential election. I guess it's a function of the US dollar and Forex. We've only had like one trade, or maybe two trades in Forex, and the euro I think reached its second target, and now the euro turned to garbage on us. But I haven't been calling too many Forex trades, and that's a function of the US dollar because we stick with the majors. Anyway, doesn't mean we won't have more Forex trades. It's just a function of the market environment. So economic calendar. Let's just go over a couple of these real quick, because these can be potential catalysts for major market moves, which obviously can affect Bitcoin as well. So Bank of England, Governor Bailey's speech, that was today, okay, for the pound, who cares? On the 13th, which is in 2 days, so that's Wednesday, we have Consumer Price Index for the US. These are not big numbers, okay? These are not big numbers. They usually don't move the market. And also another thing to note, NFP, which came out the Friday before, on Friday, That's usually the biggest economic number for all markets, for the US dollar, for the stocks, for currencies, right? For everything. It usually has a potential, it's a potential large catalyst, or you can get a wide range expansion. Over the previous year, NFP has pretty much been a non-event. Because I remember back in the day, NFP used to move the euro 150 pips in 5 minutes. That's just to give you some perspective. It took an entire month for the euro to move 100 pips, right? In December, about 100 pips. It took an entire month. Back in the day, it would take 5 minutes. Okay, so that's the kind of move, that's the kind of catalyst NFP used to be. It hasn't been that way in a while. So it's just good to keep that in the back of your mind. Now, on the 14th, which is what, Thursday, we have Fed Chair Powell speech. Again, if there's any surprises in his speech, he can move markets, right? Typically, there's no surprises. Typically, things are just like, okay, whatever. But it's good to know that this guy is speaking. It's at 12:30 p.m. Eastern time. Sometimes there could be a jump in the market, whether it's bullish or bearish, and it could be a result of something that he surprised the market with. So just keep this on your radar. This will affect everything, especially the U.S. dollar. On the 15th, 8:30 a.m., we have retail sales, control group. Okay, retail sales. Again, those are usually not big market movers. Michigan consumer sentiment, not a big market mover typically. That's all, I believe, on Friday at 8:30 a.m. and 10 a.m. Eastern time. And then China GDP, and that's what, on the 17th, which was, what is that, Saturday, I think? Okay, no one cares about that. All right, anyway, so I just wanted to point that out. You know, it's a very good idea to just be aware of scheduled economic events because they can serve as catalysts. All right, now let's move along here. And let me talk about the stock market real quick. Then I'm going to talk about gold, and then I'm going to get to the chat, okay? So I'm almost there, even though I talk too much. Let's start with the S&P 500. So we have the stock market, and today we're getting that red candle, right? We've been talking about this. We've been talking about this. Over the holidays, we had low volume nonsense, blah, blah, blah. This was after the holiday. And again, that's why you can't go by any of the hype. When the market's making all-time highs, this and that, there's going to be a lot of celebration, a lot of nonsense. Ignore it. Pay attention to levels and price action. That's the best piece of information you can get and make judgments on. Now, if we take out yesterday's low, or Friday's low, 37.83. This is the CFD, by the way, so the futures will actually have a different, slightly different price, but it's the same idea. So 37.83 on the CFD. If we close below that, we take that out, that will be a sell signal. Now, so something I want to say about this, we've been waiting for a sell signal. We've tried taking the shorts in the Qs. We've tried IWM. It's been very tough market to short. They've been high risk trades. We've been talking about that. But there's another one that I'm very interested in, and DJ just put it in here, the UVXY, which is it's one of those leveraged, UVXY is one of those pro shares leveraged short-term ETF. You can buy options on this thing, right? Now, this is a very, very risky type of trade, but it's the way we want to play the short S&P. Now, I haven't sent out a trade on this yet, but I'm what we're thinking of, DJ. Let me see, what did DJ put in here? So DJ put in here $15 call February 153. So here's what we were thinking, DJ, because I talked to Andrew about this. We talked it over, and he was thinking for February we can do a $10 at the money call. It's only like around $2.20 or something like that. So you're at the money, you get a benefit of a stronger delta. So if you do get that spike, it'll be more beneficial, right? Number one, and $2 or $2.20 is not that ridiculous. Like that's still within reason. And you're buying February. Now, if we don't get that VIX spike in the next couple of weeks after taking such a position, then we have to close that position, take a loss, and roll out another month. But it's probably cheaper to do it that way than just buying March straight out. You know, so we were thinking either buy out of the money from March, deeper out of the money, or closer to at the money, or at the money with less time, with a plan to do one rollout if we don't get that spike in the next 3 weeks. Now, February is 5 weeks, right? The third week of February is 5 weeks. So we need that VIX spike to occur in a week or two. Remember, the problem with UVXY is the decay. The theta decay is enormous on this. So there's a lot working against you. That's why it's such a high risk type of trade. But if this thing pops, if there's a spike, this thing can easily spike to 20. Okay, now again, so if you're in from 10 and it goes to 20, you bought that premium at $2 or $2.50, and that thing is worth $5 or $6, you take your money and you get out. This is not a long-term trade by any means. 275 now. Okay, it was cheaper earlier. Obviously, the market's a little weaker now. But anyway, that's the idea. We may have to adjust that. Maybe we'll do the $12 call. I mean, 275 is, I prefer to be like around 250 or maybe less. But anyway, I haven't sent anything out yet, but that's the idea that I'm thinking about, okay? I need to do something soon with this, but when I'm doing a stream, I can't send out a trade while I'm doing the stream. So if I send it out, either it'll be in the evening or maybe early tomorrow, but that's what I'm thinking. So yeah, because you get a better delta out of it, which means you get more every dollar that the asset moves, you get basically it's 1 for 1, or if you have a delta of 1, then it's 1 for 1. Usually at the money you have a delta of 50 cents or higher, so you're getting 50 cents for every dollar that the asset moves, right? So that's not bad. But the thing is, there's a good chance that this can turn out to be a loss if we don't get the VIX spike. Now, what does the VIX spike mean? Well, the VIX, as you know, is a sentiment index, and it's trying to look at today's candle, right? If the S&P gets hammered, this is going to go vertical, right? And that's the game that we're trying to play here. So back to the S&P, we're looking for a sell-off on the S&P. We haven't gotten that sell signal yet, but I'm willing to take the trade early, because in order to really benefit from like an options trade like that, you have to be in early, and that's extra risk that we have to take. Now, am I taking a huge position on something like this? No, just a couple of contracts. If you could turn a couple $100 into $1,000, that's a home run, right? You don't have to put $2,000 at risk or anything like that. Yeah, you'll make more money if it works, but the chance of it working are not great. There's a lot working against the trade, so it's a very aggressive trade. It's a gamble basically. Okay, so that's the idea. So I wanted to bring that up because if this thing has that pullback, we can get a spike in the VIX, and UVXY is a less expensive way to get involved rather than buying puts on the SPY or puts on the QQQ, which are extremely expensive. Especially if you try to buy some more time on them. And again, for those that may be new to options, you don't want to buy like 1 week out, or you need a lot more time because markets can grind and waste a lot of time. You have to buy appropriate amount of time. I was going to go for March, but then Andrew said, you know what, go for the February and we can roll it out. Okay, fine. That's fine. If it's cheaper, and if we're wrong, we have to close out for some of it for a loss. So you invest $250, you have to blow it out for $150, you lose $100, but you roll into the next one, and if that one works, you buy yourself some more time. If that one works, you'll make the money back plus more. I mean, that's what you're looking at. If it completely doesn't work out, you're looking at maybe a $300 or $400 loss, right, on one contract. So that's what you have to keep in mind. All right, so that's what I wanted to mention about the S&P. Like the NASDAQ is in the same situation. Look at the NASDAQ. That gave us a sell signal. I've been suspect of this NASDAQ all along, okay? When things go vertical like this, especially at these levels, it just broke this box here. You see this box? This is the reversal zone boundary. It just took it out, and it's going right back inside of it. That's basically a fake out, okay? Which means a lot of people are long. They're caught in this thing, and this is representation of 100 stocks in the NASDAQ, the top stocks in the NASDAQ. You know which ones they are, and that means the whole world is caught in them because they trade them on instinct. Anyway, all right, so that's the plan there. That's what we're looking at. Again, I haven't sent that trade out, but I am planning to. Okay, now let me talk about gold real quick. I'm ranting, DJ. Let me see. How am I doing on time here? Oh, 34 minutes. Okay. Let me talk about gold real quick, and then I'm going to get to the chat. I'm going to answer all your questions in the chat. So look at gold. So gold had this irrational pullback. You want to talk about irrational, right? Look at this. Look at that, right? That was before Bitcoin had the nasty pullback. Gold was looking like that. And people are asking, why is gold doing this? It doesn't matter why. All that matters is it's at a better level. So that 1840 level, and look what we're getting there. Pin bar, beautiful. That's what we want to see. That's a swing trade setup, okay, right there. But it's now it has to give us the third step, which is confirmation. Is there any fundamental reason for gold to have gotten to give back 100 points in just a couple of days? No, it's just nonsense. It's irrational. So that's why people are looking for reasons. Oh, why? Why did gold do that? Is there something wrong with gold? Nothing has changed fundamentally. What they were saying that Bitcoin can replace gold, well, what kind of nonsense, whatever that nonsense was. Maybe that has something to do with it. Maybe it has something to do with Italy wanting to leave the euro. I don't know. But it doesn't matter why. What matters is the level. What also matters is the broader trend, which we know the broader trend is not bearish on gold. Not bearish yet anyway. And this consolidation that you see on gold dating back to the August peak is a wave 4. So just to kind of give you a nice example of a actual wave 4, this is what it looks like. And Bitcoin can do something similar over the next few months. I mean, that was the August peak. And in December, we bottomed of that wave 4. Okay, so August to December, that's 3 months. That's typical. Okay, so use this as sort of a model of what to expect. Anyway, the point is, here's a potential buying opportunity in the gold CFD. Great time to be putting on buying some shares or add to your gold miner portfolio, which Andrew sent out a trade portfolio ad on one of the gold miners. I forget which one it was. Now this is just a setup. The confirmation for the CFD itself would be 1856. So you figure around 1858. It needs to take out the high and plus go a little further, and you'll have yourself a buy signal. Now, will this go straight back to 1950? I don't know. Gold's been a pain, and it's in a wave 4, right? So I don't know if that's going to be the leg. It may pop up a bit, pull back again, pop up again, and be that. That's your typical range-bound type of price action. So it's easier to trade gold with miners, okay, like Wheaton Precious Metals and NEM, GOLD, the crew. You can control your risk by getting into smaller positions. This would be a great place for an ad. If it goes lower, you can add more. The CFD, we're just waiting for the signal. I don't know if I'm going to send the CFD out because not a lot of people trade the gold CFD. I'd rather send out something. If this is a dollar move relative to the dollar, I'd rather send something else out, like a trade in the dollar franc or something. But here, let's take a look at the dollar index real quick, right? Look at the dollar index. So a strong dollar is going to put a lot of pressure on the market, on the stock market, on everything, anything that trades against the dollar. Remember, the stock market, gold, Bitcoin, those are all anti-inflationary instruments. So if the dollar strengthens, that will basically be a sign of non-inflation, which means there's no need to be in an inflationary instrument. A weakening dollar is a sign of inflation. A strengthening dollar is not. Now, the question about this dollar situation is this a trend change? You have a failed low in place, and it's going for this resistance right here of 90, basically the high 90s. This is not a trend change yet, although it could be developing into one. We need to watch this. The next resistance on this thing is around 92. So it's possible that it can touch 92 and then resume that bearish trend. We have to see. But that will be a determining factor on how these other markets play out. Keep an eye on the US dollar. At this moment, the trend, we can still argue, is bearish. We do have trend reversal structures, but in order to reverse a trend, to confirm it, we need to take out resistance levels, and we haven't really taken out any major resistance levels yet. Okay, so that's my analysis. How are we doing with time? 38 minutes. All right, so let me get to the chat. I see a lot of stuff in the chat. Again, if you have any questions about anything that I mentioned here, please ask. Also, place any symbols or markets that you'd like to see in the chat so I can get to them now as I go to the chat. By the way, if you're new to Greenbridge Investing, please check out greenbridgeinvesting.com. We have a swing trade signal by text, by email, signal service by text, by email, portfolio management ideas by text and email, and a chat room. We also have a free chat room where you get trade of the week and all that stuff. If you registered as a free member, everyone gets trade of the week, which we share on Wednesdays typically after the Talking Market show. We have a 7-day free trial. Come on by, check it out, greenbridgeinvesting.com. If you have any questions, email info@greenbridgeinvesting.com. All right, now let's get into the chat. say hi. Say, okay, DJ said hi. Hey, Isaac, nice to see you. Irina, let's see. Oh, so what's Irina's? I'm way back on the chat here. I'm just catching up. Had all my position trade. Thanks to you, we are no longer right, Irina. No, a lot of people have benefited. I mean, I've seen a lot of great reports from people like Alice and DJ and Urzo and so many people have said some nice things. I'm glad to see that. Okay, right. So Gabriel, position. Okay, that was my question to everyone. Okay. Mario, hi. Okay, so HS, one trade within a day. So what's HS saying here? One trade within the day when the other one can take position. Right. Well, it's day trading is very hard. It's possible to do things with day trades, but it's a completely different mindset, and it's something I don't talk much about because I don't want to make people nuts. But yeah, it's a lot easier to swing trade, especially if you're new. Swing trades and position trades are much more relaxing. You don't have to be a prisoner to your computer. It's a lot easier on your psychology, and it's a much more effective way to put smaller amounts of money to work. Okay, people want to take their $1,000 and double it overnight, and they go to a day trading website, they make that promise on there, or they sell that promise, and then okay, great, and then meanwhile you have to spend $2,500 on the education alone, and whatever, right? You know how that goes. Anyway, there's a lot easier ways to put your money to work effectively while keeping a very tight control on risk, because that's the key thing. Okay, Goran. Hi. Hey, Goran. Nice to see you. Alice, what needs to happen to see the USD EU are back to 1-1 ratio? Strong euro is not good for EU investors. Okay, so good question from Alice, one of our talk about long-time member. I mean, Alice and Irina and DJ, like these people have been with us for almost 2 years now. Okay, so good question about the euro. What needs to happen to see the euro go back to 1-1? I mean, the euro is at 122 right now. Well, for the dollar obviously needs to rally. That's what you need. Now, look, the euro is pretty much the euro is the inverse of the US dollar index because it's the heaviest weight in the dollar index. So they're going to look inverse to each other, right? You have a failed high, just like we had the failed low on the US dollar, and now we're pulling back. I think the euro trade that I sent out a month ago, I think it got stopped out. Now I don't even remember I have to look at the trade, but it reached 2 targets though, which means it was profitable, and I think even at the stopping point, it's still either break even or green. I have to check. Anyway, to answer Alice's question, you need a strong rise in the dollar, which means resistances on the DXY need to be taken out, and supports on the euro need to be taken out to even begin. And this euro is in a strong trend. Okay, so this trend is still intact, the euro against the dollar. All we have is a little pullback here. This could be the beginning of a trend reversal, but there's no evidence of it yet. So you need, in order to really start doing things, you need to start taking out some major levels. I'd say the first level that you really need to clear, I'd say is this double bottom area right here. What is that, 116? If price can eventually take out 116, you probably have a bearish trend on your hands, but you have a long way to go before it gets there, and a lot of potential attempted bounces and all kinds of other stuff going on. Your first support, by the way, significant support on the euro is going to be that 120, this 120 area. The old resistance is going to act as a new support plus the whole number. So that's the first place that I'd be looking for an inflection point or some type of buying activity to develop around 120. We have to see how that goes because, again, it's a function of the dollar index. So that's what I'd be looking for. You clear 120 and you clear 116, which again, that kind of move, especially at the rate that these things are moving right now, which it takes, again, if it takes a month to move 100 pips, that's slow. So it could take 6 months. All right, it's just something to keep in mind. So good question. Thanks for asking. I mean, I'm open to still going long in the euro, not at this moment, but we go to a support, we get a reversal, just like gold. I'd be open to taking another long swing trade on the euro. Okay, so good question. So Alice, you asked about USD EUR, but basically, I hope this answers your question. It's basically if I do USD EUR, it's just going to be the inverse of this. All right, Mario, in PT, you build a position. Okay, so he's talking about the position trade, right? Selling highs, top, major resistance, buying lows, bottom. Right, Mario, yeah, that's right. Alice, I'm thinking about it as well. Okay. 26, 23, 2016. Okay. Mark, UVXY. Okay, right. DJ, right. So we talked about UVXY. Irina's answering about position investors steps into a trade when the market is hated. Oh, those are my words. Prices are extremely depressed. Sentiment is at extreme lows. Willing to take some pain for a prolonged period of time. Oh, Andrew. Okay, Irina. Andrew copied me. He copied me on that. I'm the one that was talking about hated markets. Anyway, Tarkus, hey, nice to see you. Irina, dollar cost averaging. Okay, right. Okay. Gabriel, as an investor, if we skew our drip-in strategy, how would you suggest skewing it? Okay, so that's a good question, Gabriel. You have to skew something like that. It's going to be dependent on your personal situation and your risk tolerance, and also how much money you're planning to put to work, right? I mean, if you have $100,000, it's going to be slightly different than someone who's putting $10,000 to work, as an investment. So one thing I like to do is, first of all, I like to, whatever amount that I have, let's just say it's 10,000. I like to cut that in half, and it's 5,000 is just going to stay in, it's just going to stay in dollars or whatever, and I'm going to use that for unusual and unique opportunities. The other 5,000, I'm going to split that in half, right? 2,500 will go toward investments. The other 2,500 will go toward much more aggressive trades, right? Like swing trades and things like that, options trades, and I would allocate it all like that. So with those allocations, now I can start figuring my skew. So let's say, I'm only working with $2,500. I only have to work with, right? $2,500 as an investor. I can take 10% of that, right? And start out, okay, so my conservative entry, especially at market highs, my tiniest amount will be 10%. So how much money is that? What's 10% of 2,500? It's $250. Okay, and if you want to cut that even further, let's say you're buying Bitcoin at its highs and you know how risky that is. So, okay, you know what? Instead of buying a $250 allotment, I'll buy $125 worth at the high. So if this thing pulls back 12,000 points like it just had, who cares, right? And as it pulls back, I'll add my other $125 to reach my first allotment, right? So that's one idea to consider. Okay, good question. So let me see what else. So Tarkus, would it make sense to buy back at the levels where trim BTC long term? Well, if you're as an investor, not necessarily. Okay, because the thing is, the market may give you better prices. So it's good to have levels in advance. So let's just go back to Bitcoin here for a minute. It's good to have levels predetermined on your chart, so you can get those support and resistance levels a number of ways. One simple way, without getting too complex or complicated, is you just go back to old resistances, right? Become new supports and vice versa. You use those points as your points of reference, and if price gets there, you can make a decision, right? It allows you to say, okay, I'll make an investment here, or I'll wait to see if it stabilizes and then make the investment, okay? And that's where you determine your skew. If you're going to be an aggressive allotment, or you're going to cut that in half and be more conservative. Only you can make that decision. Okay? Now, it's better to let the market make those determinations instead of saying, well, I sold some here and I'm just going to buy it back. Because like I said, the market may give you better prices. Right? Like right now we're at 33,000, right? And at one point today we were at 30,000. So that doesn't mean that this thing is going to completely reverse and go higher now, although it can. Anything is possible. One mistake that people like to make, or not like to make, but they often make, is they go into this with opinions, or they go into this with absolute ideas, and you can't. You have to be open to anything and say, well, Bitcoin may go higher from here, it may go lower. Since it's at a low, I mean, I'm buying something that's generally strong near a low, that's generally a good thing to do, but it can go lower, right? As an investor, you have to think that way. It's different on smaller time frames. Okay, you have to be a little more precise in with your rules, I should say. Okay, so I hope that answers your question there. Let me go back to the chat. Oh man, DJ, this is going to be a long one. I can't do 2 hours, okay? No 2 hours. Michael's going to laugh at me. All right, let's see where we are here. Alice, can you look at ICX and STX? Okay, ICX, USDT, okay, obviously an altcoin icon. and here it is on Binance. All right, so when it comes to these altcoins, many of you know, I like to use Bitcoin as the point of reference, or just like I use the S&P, it's the leader. So my first question that I look for, the first question I look to answer is, how is it performing relative to Bitcoin? Well, Bitcoin made, as we know, all-time highs at 42,000. How's this thing performing relative to its history? Well, Icon was much higher, okay? Wow, it was a lot higher. So, is Icon doing anything spectacular here? It tried. The Bitcoin went to 42,000 and this thing tried. Okay, I'll give it that. It tried. It attempted to take out this resistance back here. I guess this peak sometime in August there. It tried. So I would gauge that as it's following Bitcoin. It's doing its job. So in a situation like this, again, these are not good candidates for swing trades because they don't really do their own thing. So Bitcoin will serve as your guide. So Bitcoin's at a support. I'd be looking for support on this thing. Okay. Here, let's draw a support level on here. I'm just going right now. I'm just going by previous levels. Your previous resistance was around here, 49 cents, so basically 50 cents. And as you can see, there was a bounce attempt there. So if you're looking to get into some of this, again, this is where you have to play that accumulation game a little bit. Very tough to swing trade these, unless you're going to use Bitcoin as your guide. The problem is they're not moving on their own, so you can't rely on the charts as much, especially on the candlesticks. But the levels can be somewhat helpful. So I'd be looking at that 50-cent level as a potential area to buy some. And of course, if Bitcoin makes a new high, this will need to make a new high. It'll need to take out the 71 cent area, 71 and a half. If it does not, then it's acting relatively weak. The thing with these, and I have pointed this out a number of times, it's like a gamble. They're like penny stocks, and some news may come out, and next thing you know, this thing will be at $1, and there was really no sign of the chart will not really help you with something like that. So either you're an insider and you know that information before everyone else, or you're just gambling and you just have to hope for the best. So the way to play this, just like Theta, and by the way, Alice is the one that brought up Theta, right? We threw $100 into Theta and made $1,500, right? It took like 6 months or whatever, but eventually that was a home run. Now, some people may say, oh, don't you feel bad that you only threw $100 in? You could have thrown $200 in or $300. We were only willing to risk $100. There was nothing on the chart at Theta that was going to tell us that it was going to do what it was going to do. It looked like a garbage altcoin, just like the rest of them. It was just a gamble. If it went to zero, well, who cares, right? We only had $100 in it. That's how you have to play these. Or I should say, it's a smarter way to play these because you don't know which ones are going to go. They don't trade on their own. Most of them don't have any merit to move up on their own. They're just a bunch of hype, okay? Most of them. There will be a few that will do spectacular things. Now, the altcoins that I like, of course, Andrew likes these too. Okay, sorry about that. You know how this internet goes. You know how this New Jersey internet goes. Anyway, so like I was saying with Litecoin, right? I like Litecoin. These are the majors, right? The ones that everyone knows. Ethereum, you know how it goes. Those are probably altcoins that are worthwhile. XR, the other one, XMR, even though this had some negative news. Look at that attempt before the Bitcoin sell-off. Look at that move, right? Monero actually had a breakout. It broke that high. So those are the coins that I like. They're doing what they should be doing. Monero is like a leader there, doing its own thing, which is very unusual for these. So those are the alts. If I was going to do something with alts or invest in alts, I'd probably be looking at those. All right, now, so Alice had another one here. Hold on. So that was one, Alice. The other one was STX. Let's take a look real quick before I talk too long. All right, so STX, block stack. Oh, I'll tell you what. I like the structure. Nice pin bar here. Okay, so look, this is much better structure. I like that. Again, these things. Now, if this thing is proving its relative strength, that's a good thing. Let's look back. How is this thing relative to Bitcoin? Well, Bitcoin's low was back in March. Okay, looking at resistance levels here. There's one there. You have one here. Right, old resistance, now new support. Okay, so not bad. It looks pretty much like Bitcoin. All right, so that's a good candidate. You do have that pin bar. So if you take out the high of what, 49 cents on this thing, looks like the high, you do have a buy signal, but Bitcoin needs to cooperate. One thing, you do have some extra relative strength because Bitcoin is looking ugly nearer its low, and this thing's giving you a nice clean cut pin bar. Just keep in mind, they don't trade on their own. In theory, if this thing could trade on its own, it should be making the higher high, right? Where there's a higher low, it's likely to be followed by a higher high. The trend is clearly bullish on this thing. So you do have all those factors going for you. The question you have to ask is, what's the risk? Well, the risk would be the pin bar low at 38.67, basically 38 cents and a half, or whatever you can say. If it takes that out, then it's probably going to go into that consolidation similar to Bitcoin. So you can measure your risk that way, all right? And then you're looking at potential targets of like maybe 60 cents, maybe 70 cents, perhaps higher, because again, this thing should be making a higher high if it's going to stay strong. Now, looking back historically, looks like what, this thing's only been around since November. I mean, at least on Binance. So, and it went beyond that high. So I'd be looking for that higher high, okay? And something like this. Just so you all know, Alice knows, these things, all of these coins are highly risky, but that's a good one to bring up. STX, thanks for bringing that up. Definitely put it on our radar. All right, let me move along with the chat here before I talk myself out. Let's see. So, okay. So DJ, okay, okay. Yeah, right. So DJ mentioned something here. UVXY is meant to go to zero. That's right. That's why it's a high risk asset. UVXY is far from any type of investment grade type of, it's not an asset. It's a gambling instrument, basically, is the best way to call it. It's the best thing to call it. And it's got the time value decay is stacked heavily against you. So if you're not right in like, that's why if we buy 5 weeks worth of time and we're not right in those first 2 or 3 weeks, we have to roll, take a loss, and see if we could buy some more time and if it works. If it doesn't work, we just take the loss and get out. It's not something you keep buying into, okay? So thanks for reminding everyone, DJ. Aziz, can you check BLI? Sure, BLI. Yeah, this was a one that Andrew had brought up, I believe, right? Berkeley Lights. I think this was a trade of the week, yeah. So this one had a nice pop. Let's see, target 3. Did it go to target 3? It sure did. This thing went to 112.30 and we got out at 99.80. So this was a while back. So let's look at some levels real quick. This thing has been all over the place, right? But the trend is generally bullish, generally, as you can see. Now, at this moment, we're getting we have this level right here. It could be a head and shoulders developing, right? You have a shoulder, you have the head, you have the shoulder. That doesn't necessarily guarantee a trend reversal, so I wouldn't classify this as a bearish trend. Not yet. It needs to start breaking supports. At this moment, though, you are inside of this range, okay? So the range low is around 82. The range high is around that mid-90s area, and you're in the middle of it. So this is not the best spot, really, to take risk, in my opinion, if you're looking for a new trade. I would wait for the range low, especially... Now, something like this... They're one of those gene or one of those biotech whatever companies. They're probably not going to be highly correlated to the S&P, which is good, right? Which means it can do its own thing. So I would wait for a range low or a failed low situation before taking a trade, and at least the probability is more in your favor in that type of situation, buying near those supports. In the middle here, anything can happen. It may go higher, it may go lower. It's very random. So I would wait for those more attractive levels as a swing trade if you're interested in something like this. As an investor, I don't know. I would probably wait for better levels anyway, because, I mean, look at this thing. It's possible that this thing could test 74. So allocation-wise, you want to take that small bite? Okay, this would be a small bite type of play. And then if it pulls into these supports, you take a larger bite to average into a position. But that's a different perspective, right? So the swing trade is you wait for the better levels. It's going to be all in, all out. You're going to have a stop. You're going to have targets. The position trade is you're going to see how this thing behaves at levels if it gets there, and you have to adjust with your size. Okay, anyway, but you do, here's the problem that I see is you have a lower high in place, right here, which is what, 98.38, and that lower high could be problematic, right? Where you have a lower high, it's likely to lead to a test of the low or a lower low. but that does not necessarily mean you're in a bearish trend. There's a difference between trend and momentum. All right, so I hope that answers your question. So basically, I don't like it at the current price. I would wait for better prices. All right, let me see what else we got here. Gabriel, what are your thoughts on DOT? Is it a garbage coin or not? Okay, so I've seen a lot of people talk about this DOT. You know, I can tell you this. Let me see. Is there a better chart on this? Let's see. I'm just seeing if I can get a longer time frame chart on it. That looks like this is Bitfinex. All right. So this goes back a few months. The structure is bullish. I'll give you that. All right. So you have, I mean, it was range bound for a while, broke out. Looks very similar to Theta, right? Theta has done a similar thing, and now it's pulling back with Bitcoin. Okay, fine. So now if you're not in it and you're looking for a trade, whether it's a position trade or a swing trade, I'd wait until this thing stabilizes a bit, because right now you have bearish momentum. Yeah, it's trying to recover, but that's not enough. The next candle can easily open and take out that low. Your support that's in play right now on this thing is going to be this area back here. What is this high? $6, around that low $6 area. If you can get a test of those low $6, that would be a good place to probably start testing or putting in very small allocations and see how it behaves there. Because the thing is, you need some sort of structure to develop. You have nothing here. A lot of times, I mean, there are occasions where it'll recover right away and just make that new high, but you can't go by these rare, once in a while type of things. Okay, you have to. I see I cut off again. You have to look for what happens more on the average, and what happens more on the average is you consolidate. So I would look for something like that, especially if Bitcoin consolidates, and then work with that. Okay, I don't know if this is a garbage coin exactly. If it's a token, like a utility token, then it's likely to be less of a performer than something that has more of a function of a currency. Okay, like a utility token is something like XLM or XRP. Or something like Wabi, right? Those are utility tokens. So just to kind of give you an idea. But yeah, so I hope that answers your question. Okay. Arena, Gabriel, DOT is an awesome project that aims to be an improved version of Ethereum. In fact, the co-founder of Ethereum is the founder of DOT. Only issue is that it is only accessible on Binance. That's a problem, because it needs to be on other exchanges, especially on Coinbase. If a coin is not on Coinbase, I mean, Coinbase is probably one of the more conservative exchanges. If it's not on Coinbase, it's even less of a, I don't know. I would say it's a riskier asset compared to the average risk. All right, so Irina says, if you are US, I would discourage you from being compromised on a foreign exchange. Binance China locked out all of its US customers. Binance US only has 10 to 20 projects. Oh, that's interesting. I didn't know that, Irina. Irina's really on top of that whole space. Thanks for sharing that. We are prone to losing our investments due to the inability to transition. Okay. Good to keep in mind, right? Yeah, I remember way back in 2017, 2018, Bitfinex did something very similar where they locked out any US customers, and they basically, the only choice you had was to close your positions. You couldn't do anything else. So it's just something to keep in mind there. So all right, let me see. AMC. So DJ, I remember DJ brought this up a while ago. How am I doing with time? Okay, I have a few more minutes. So now AMC, this is a movie theater chain here in the US, and you do have this double bottom situation, right? Look at this. Sort of, it's a double bottom. Here, let me highlight that. Failed low, double bottom area. It's trying to bounce, but look, you are facing a lot of bearish momentum, right? There's no trend here. You have this bearish situation right there. All right, you have that high that you're competing with, right? So you have this high right here. That's a problem, but that could be a potential target. Then you have this high over here. Right, so basically, this is a range-bound market. The previous trend was bearish, right? Well, we know why on these things. I mean, who goes to the movie theaters right now? That's logic speaking. So it's at a failed low area in something that in theory should be making a lower low. If this thing doesn't make the lower low, then you have a reasonable potential of retesting 4.5. You're at $2 right now. So this is a great example of a hated stock, definitely not liked. And this is a lot of times where opportunity can be found. Because everyone, oh, AMC, yeah, they suck. If you ask the average guy, or if you call up Kramer and you ask him, what do you think of AMC? I wouldn't touch AMC. Okay, fine. That's where opportunity is, right? The herd hasn't discovered it yet. The herd gets involved when it starts breaking the highs. Oh, here, oh, AMC is safe to buy again. Great, that's when we're selling it. Anyway, so you know what, DJ, not bad. I'm sure the options are very cheap. I would consider what, 6 month or yearly. I know we talked about this before. It was probably back here or maybe back here somewhere. But it's still a good play, I think. And the goal would be to try to just get back to the middle of the range. So you want to buy yourself a lot of time for that, right? So 6 months out, I don't know what the premiums are. Even you're buying $4 calls or something like that, right? That would right in the middle of the range. I think that would be a worthwhile play. I have to look at that. I mean, the recent price action here, okay, the fact that you made the failed low, that's all good. That's a good sign. Now, if it takes out those lows, right? It takes out the low, what is that? Basically $1, those low $1.90 area, it takes out that low, it's probably going to go lower, okay? But the fact that it has sustained it and it's trying to bounce off of it gives you a failed low situation. So it's worth, I'd say it's highly speculative, but it's worth a try, okay? Especially if you can get some cheap options on it. So I like it. See, DJ was right. See, DJ knows me. Good, good. He anticipated my move there. Tarkus, so you don't put orders in, you see how it's behaving on the level. Right, Tarkus. So going back to something like Bitcoin, you know, especially on a support level like it's at, no, we don't place orders just in front of it, because a blind order, like you can place a limit order, but you don't know if it's just going to keep going. You know, there's no way to know. If it was as easy as just placing blind orders, anyone would just do it and just make money, right? But the problem is it works sometimes, but it doesn't work a lot of times. It's random. And you can get caught in some really nasty situations doing stuff like that. So it's better to let the market build structure where you could measure specific risk. Putting a limit order in there at the level, you could say, well, I'll just give it, you know, a couple of 100 points of risk. Okay, it's possible, but it may just go straight to your stop. We tried a few techniques like where we would put a, the market would do something like this, and then if it got away from us, I'd put a limit order under the market to see if we can get tapped in on some kind of noise. But I can tell you quite a few times it goes straight to the stop, and it's like, all right, you know, I'm just not going to do that. It's just not worth it. So it's better off to wait for the structure. Okay, you're not going to get the best price doing that, but at least probability will be more favorable. Okay, so I hope that answers your question. Gabriel, I believe you can get dot on. Oh, okay, nice to know, Gabriel. Thanks for letting us know. Kev, January 2022, $5 call for 85 cents. Oh, see, look, so Kev, let's go back to AMC for a moment. So Kev is saying you can get the $5 call for a year's worth of time. Okay, the $5 call, that's way up here, $5, okay? For 85 cents, less than $1, that is cheap. No one likes AMC. So you can spend $85 for 100 shares, and you have an entire year for this thing to test $5. What do you think the chances that this thing is going to test $5 in a whole year? You realize if you look back from November to December, it almost tested it in just a month, right? In just a matter of a month, it's done it. So you have an entire year for it to do that. I think that's a great, it's a great trade. And if you're wrong, you lose 85 bucks, right, per contract. So that's a nice one. You buy, you know, you buy a couple of contracts. If it goes to your strike price, that 85 cents will probably be worth a couple of dollars, maybe $1.50, maybe $2, something like that, especially if it goes there in the next couple of months, like let's say just the first quarter, and you still have, you know, 3/4 of the year to go. The time value plus the premium that you've collected, those options will be worth something, and that's where you can double or triple your investment. You hear some of these options, people, and they'll come out, I made 300% on my options trade in 5 minutes. Well, how do they do that? Well, if you're only risking $85 and you make, you know, $200 on that $85 risk, you can say you've more than doubled, right? Because you've only risked $85, right? So options offer that type of potential if you know how to work them right. And this is one of the, I like this a lot for one of those speculative option plays. But at the same time, it can go to zero, right? But you're risking only $85 or per contract, $85 per contract. So thanks for bringing that up. DJ, okay, I got in AMC, $3 call January for $1. I got in after the candle, took the pin bar. Oh, nice. All right, so DJ's in early. DJ, I like it. Okay, I like it. In fact, I'll probably take that position. I'll probably take a similar position. Probably, but I do like the. See, DJ is clever with these smaller strikes, the $3 call. I'd probably go for the $5. Now, NYCB was a similar thing. DJ, I believe, did very well in NYCB. Do you know NYCB almost went to 12, DJ? That was an options trade that I mentioned. It wasn't an official trade, but I mentioned it like back in like, I don't know, October. And NYCB was like at $7 or $8 or $9. And I said, if this thing pops to 12 over the next few months, it could be worth something. Well, DJ bought the $10 call instead of 12, and it went straight through 10. Anyway, okay, so this is a similar type of play. All right, how am I doing with time here? Man, I talk too much, DJ. All right, Dwayne. Hey, Dwayne, good to see you. CNK, another theater stock. Let's see, CNK. Okay, I'm not familiar with that one. Let's take a look. Oh, yeah, definitely has performed better. So, Dwayne, DJ's pointing out the that he's pointing out AMC for that technical situation and the cheap options. Now, let's take a look. Just now this thing is near its range high. Okay, so this would actually, for our purposes, especially for the options play, this would be a bad place to be buying calls because you're at the range high. Yes, it's outperformed AMC, but there may be some reasons for that, right? It doesn't matter. AMC is near a low while this thing is near the high. So things can change, over the next 6 months or whatever, and next thing you know, AMC could be testing $5 again, and this thing may be back at the middle of the range. Obviously, they're not moving together, right? Because AMC is off of a low while this thing is off of a high. So interesting, though. Thank you for bringing that one up. Yeah, this one would not be a good candidate for the strategy that we're talking about. You'd have to wait for at least a test of, what is this, the $12, 11.5 area, something like that, or the low of maybe $7. Something like that would make much more sense, okay, for a long call strategy, 6 months out type of thing. Okay, thank you for bringing that one up. If we were in something like this, we'd be looking to get out in these situations. Okay, so let's see what else we got here. Alice, KuCoin. Okay. Oh, so they have DOT also. Okay, meant better in terms of going. Well, so right. So the relative strength, CNK is relatively stronger than AMC. That's for sure. But these things may not be following the. Well, AMC is clearly not following the stock market, right? It seems to be doing its own thing. Well, this thing was following the stock market. Now the stock market may be pulling back. This thing never took out its resistance. So relative to the S&P, this thing is not performing very well. But relative to AMC, yes, definitely a stronger candidate. Good for one on the radar. But Dwayne, so when DJ brings these things up, we're looking for specific options type of plays that they're highly speculative, and we want to look for options that are very cheap, that are at good levels where the instrument can reverse, and we can take advantage of these cheap options, and we can buy a lot of time real cheap. So all we need the thing to do is move up halfway, and we have a nice trade. So it's not going to be based on any type of fundamentals or any type of relative strength, really. It's more of like basically levels and betting on a repeat of a pattern. That's really what that play is, and it's like a gamble. It's highly speculative. There's nothing conservative about it. Okay, so thank you for bringing that up, though. We got into BLI trade on November 25th. Okay, right. Okay, November 25th. Let's just take a look at that BLI real quick. When was that? November 25th. Oh, was it right around 20? Where is November 25? Right around here. Oh, right in this area, the failed low. Right. That was a nice trade. Okay. So no problem, Aziz. Peppy, hey Peppy. Thanks. Okay, cool, no problem. Okay. Well, thanks. I appreciate that. All right, let's see. DJ. Okay. NYCB. Yeah, NYCB. Oh, right. That was even earlier than October. Okay. That thing was a, I didn't make any money on that NYCB, and it's because I bought the strike price too far out. But I only risked $75. So there you have, okay, no problem. Kev, hi, okay. So, see, right, so as DJ's saying here, I look for cheap options and just forget about it. Right, it's just it's a very speculative options play, but we're looking to double or triple on those options. Like NYCB, I bought a bunch of contracts for an average price of 75 cents. All I was looking for was a push to like maybe, I'm sorry, was it? No, I'm sorry, I'm wrong. I paid like 5 cents. I paid $75, right? For an average price of between 5 and 10 cents. All I was looking for was a pop to like maybe 25, 30 cents. It's like playing penny stocks. But I bought myself like 4 months of time. Obviously, NYCB had not reached the strike price in that time. DJ was smarter. He bought the $10 call. And it went through $10. So I really like Roku and Tesla. So yeah, Roku, these things are expensive, right? I mean, look at that. Man, now Roku, ugh. How many times have we missed this stupid stock? It's at $400. Been following this thing since it was 30. But you can't touch these, right? You just can't touch them. They're expensive, and they're just getting more expensive. And this is interesting, especially in the face of a red stock market. But it'll pull back, right? There'll be opportunities. We missed this breakout. Man, Andrew's been asleep. What's going on? I'm going to blame Andrew on this one. It's his fault. Why did we miss Roku? It's Andrew's fault. It's not my fault. Anyway, wow. Thanks for bringing that up. Tesla. Yeah, I've been watching Tesla. I want to buy some Tesla too, but this is too early, right? It's given back $69 today. Some people are going to make the mistake of thinking that this is a pullback to buy. It's got a long way to go. First support on this thing is at 680. That's your first support, 680. So as an investor, that's the first place I'd be looking to, put on some is at 680. And if we get a steep market pullback, you may see lower prices. I know it's hard to believe, but anything is possible. Remember, markets are irrational. It doesn't matter how great the company is. It doesn't matter how much positive hype you hear and all this other nonsense. Does not matter. Okay, Apple, great company. They're going to pull back too. All right. Let's see here. Kev. Right, I have to spend right, see, so DJ brings up this point. I have to spend $4,000 to $10,000. And there's no need. There's so many better opportunities where you can put small amounts of money to work. Because remember, these are high risk. So if you lose your small amount of money, you're like, all right. But if you win, it's like a pretty big win relative to what you were risking. If you're risking $50 or $100 and you make $300 or $400, what is wrong with that? Nothing, right? So that gives you confidence. It allows you to ride out any type of adverse moves. You're not going to make emotional decisions. That makes you a strong hand. And that is how you capture some of these big moves, right? Another case in point, real quick, I got to wrap this up. I'm talking too much. But another case in point that I want to bring up is Jumia, right? This was, we put out this trade a long time ago, and we got out early, of course. But this thing had earnings right back here. And if you had bought the options on this thing when it was at $8, right? Jumia at one point was at $8. The 1 year options at that time were $2 or maybe $2.25. Those $2 options on this move, which took place over the next basically month and a half, those $2 options became worth over $20, which means you would have risked $200 to make $2,000 in basically a month and a half, 2 months. Are you worried about losing $200? Probably not. But a $2,000 profit off of that, that's a home run. We've had a number of these. This is not a trade that we were in, that options trade, but we've had similar, right? Like NEO. Look at NEO. NEO, look at this, right? This one was a big one for us, NEO. Another big one for us is Workhorse, right? This is another big one back on this move here. Or maybe it was earlier. But we've had a number of those home run type of trades. The reason that we're able to capture them is because we're not taking large risks. Okay, Kev, I think something has to happen with AMC. Otherwise, well, it's possible. It's possible. But see, Kev, this is logic versus, with AMC, it's logic versus irrationality, right? So it doesn't make sense from a logical perspective for AMC to go back to $5, but it has been there before. It's tried, right? For whatever reason. So it's possible that you get some dumb news comes out and everyone piles back into AMC. It's irrational, even though they may have financial problems. But that's the game that we're playing, right? It's a very, very aggressive, speculative type of gamble, right? And it's based on, we're just betting on human emotion. We're not betting on anything else for something like that. That's why, you don't see us pushing out all types of trades like that, those high risk trades. That's like DJ will bring it up, we'll talk about it. I probably wouldn't share that. I wouldn't send that out as an official trade because it may be too risky for most of our members. And we're very conservative with the type of trades. And if it is a more aggressive trade, we're very clear on it. Okay. So let's see, Gabriel. Yes, that's right. That's right. You just add a number 1 to it, Gabriel, and you'll find him on TradingView. DJ, you just sent out a swing trade in the 90s instead of a position trade. Who sent out? Oh yeah. You just sent us. So I'm not sure what you mean there, DJ. Now, Gabriel. Okay, so I'm just catching up on the chat here. We bought GMI and sold them. Right, and Jamia still went nuts, right? But that's an unusual situation. My point is, on something like Jumia, you can, how do you capture those moves? Or is it possible to stay in? Yes, when you're a strong hand and you don't care. Then you're like, whatever. Okay? Kev, buying at the top and selling at the bottom. Right, we made money. I am sure people have, right. Well, right, on something like Jumia, that's the herd. So the herd mentality, they get all excited, right? All your Robinhood friends, DJ, they get all excited here based on instinct because they feel it's the right thing to do, and they buy the high. And then it doesn't work out, and they either get stopped out because they bought too big, they get margined out, or they bang it out because now some negative news. Oh no, this thing's no good. And they bang it out, they take the loss, right? And we're buying it. Well, we're not buying this one yet, but that's typically the cycle that repeats itself over and over and over. Reactive traders provide the opportunities for the ones who have a plan or a routine or a structure to time the market or recognize the weakness in human nature, because that's what it is. It's basically weakness. It's ineffective behavior. Buying the high because you think it's going to go higher is not relevant to how markets work. So it's a weakness. Okay, naturally we're programmed to do that. We think that things are just going to continue the way they are. That's what we're made to believe. Markets are random though. Things can change for reasons that we didn't expect out of nowhere. Now people are going to react to those changes, and they could react in an irrational way. They tend to overreact, and that's where opportunities develop if you know how to look for them. Of course, there's always risk. Risk is something you must always respect. There's no absolutes in this game. So we look at it this way. We tell our members this all the time. If you could manage risk effectively, the byproduct of good risk management is profit or a positive return. That is all you're looking for. You're looking for consistency. Everyone wants to turn their $1,000 account into $3,000 overnight. That is what everyone wants to do. That's the gambling mentality, and that is what leads to the herd mentality, because now you're at the mercy of the market, and fear and greed will drive your decisions. You will make the wrong decisions at the wrong time. As a market timer, I'm looking for those weaknesses, right? Because those are opportunities, and that allows me to, if I can measure my risk properly, I can capitalize on those opportunities with measured risk. That is what promotes consistency. Okay, that's enough. I'm not going to talk anymore. Let me just see where we are with the chat. Okay, I get those one. Oh, right. I love that. Trade on instinct. Not my marketing pitch, Kev. Not mine. Maybe some of these other gurus. Not mine. Go on TradingView or go to some of these websites. They should have that. In fact, I've seen websites where they say, "We teach you how to react to the market." All right, have fun with that. Well, that's good. We need those people because they are the ones that let us in and out of our trades. Okay, Emil, is Neo trade still open or did you close it? No, well, Neo's closed. Neo reached its third target. All right, in this gap, our third target was 61.85. This thing closed at 62.70 today. So we're out of Neo. That was a trade of the week, by the way. So all free members received that trade idea. Everyone received that trade idea a couple of weeks ago. Nice trade. That was one of Andrew's ideas. Okay, let's see. HS, can you please look at BTC again? What do you think of the current situation? I should go to I should go to marketing webinars. You're right, DJ. I'm probably one of the worst marketers there is. All right, so Bitcoin real quick. Because as a marketer, you're supposed to tell people what they want to hear. And I don't. I share reality, and people don't want to hear reality. As DJ mentioned, his friends got mad at him for telling them not to buy the high. And because people want to be lied to, right? And that's why marketing, good marketers, there's lots of them. That's why they get away with, they make a lot of money too. And, you know, we sit here, we tell the truth, and man, we don't do as well as they do. Let me just put it that way. Anyway, okay, I got to wrap this up. One more minute. So HS is a member. So when members ask questions, I try to answer. So what's the situation? Look, we got the pin bar developing, but HS, here's the thing. So we're at 34,399. People are trying to buy into that low. It's still a red candle. This is not a pin bar, right? The open to the close is still way too high. You know, on a day trade time frame, there's going to be an opportunity here on such a candle. If I go to a 60-minute chart, okay, look, on a 60-minute chart, okay, cool. There's a buy signal there. Look at this pin bar. Look at that pin bar on the 60-minute chart. Okay, see that? Okay, great. But I'm not working on a 60-minute chart. I'm working on a daily chart. So this doesn't mean anything to me because on the bigger picture, the risk is still too high. This is a failed low. I mean, there's a lot going on here as far as a long signal as a day trade, but I'm not looking at a day trade. So remember, with a day trade, your risk has to be defined on this time frame and your rewards also have to be defined on this time frame. Your first resistance on something like this is around, what, 37, 38,000, something like that. So you may be able to pull that off, but you may have resistance actually around 34.5, something like that. Things change real fast on this time frame. So I wouldn't go by that. I shouldn't be showing you this because I don't want you to be confused. That's why I avoid day trade stuff because things change so fast. And then you say, but you told me it was a long signal. And then it changed. Well, yeah, because things change really fast on that time frame, and you have to be able to adjust. On the longer time frames, like swing trade, it takes a while for things to happen. So you have plenty of time to get into positions. You have plenty of time to make judgments. You know, it doesn't have to be a minute-to-minute thing. Like when it comes to day trades, you have to be very nimble, and you cannot hesitate. Right? So what it usually means is you're going to take a string of small losses before you get that one winner that will make up for your losses plus more, right? That's typically what you will face as a day trader. Swing trader is much less eventful, but probabilities are more in your favor. It's a lot more relaxing when you do it right. Anyway, so the point is, from the swing trade perspective, the risk here is too high, okay? Because this, for one, the candle's still open. Keep something in mind. This candle can close weak, right? Even though it doesn't look like that, we still have a couple of hours, right? What, 3 or 4 hours before this candle closes? I told you, DJ, I'm talking too long. It may close on its low. It may not. It doesn't look like it will right now, but we have to see how it closes. That's when we can make a judgment. The next candle may be an inside bar. At that point, then we can consider something for a swing trade because it could measure the risk and I have some form of stability after the inside bar develops. So if a trade develops from here, HS, it may take another day or two. Okay, that's the frequency of a swing trade. It's a lot more has to happen, and that keeps you out of all that noise because that buy setup on the 60-minute can go away. Next thing you know, it's breaking lows again, and you're like, man, that buy signal sucked. I didn't get anything with that. And now you're getting stopped out, or worse, you're going to hold on. But, well, it's pulled back. It'll come back. And then next thing you know, this thing goes to 28,000, right? And there's no way to know any of that by looking at this candle right now, right? So that's how I'd look at that right now. All right. Anyway, also, do you think you can share with us an Excel spreadsheet to help us properly size our position? Well, that's a good question. That's a good question, HS. I was thinking about putting something together in that sense, but I don't have anything right now at the moment, right? Because it's a very personalized type of thing. But I'll talk to Andrew about that, see if we can come up with something. Okay. But yeah, that would be a helpful tool to help people organize their strategy. So thanks for that question. Anyway, all right, everyone, I'm going to wrap this up. Yeah, DJ, right. DJ's like, man, he's out of here, talking too much. All right, hour and a half. Enjoy the rest of your day, everyone. I hope you found this helpful. Please press the like button if you have. Also, register for the channel if you haven't, so you can get an email notification every time I do one of these. Plus, Talking Markets tomorrow at this time. Check it out. Me and Andrew, maybe Henry will be back, and we'll talk about some more details here, especially about Wave 4. I know, DJ, I know. I'm signing off right now. Also, check out greenbridgeinvesting.com. We have a swing trade signal service by text, by email, portfolio management ideas by text, by email, chat room, all that stuff. Many of the people in this chat are in there, so you know what I'm talking about. Check it out. We have a 7-day free trial, greenbridgeinvesting.com. If you have any questions, email info@greenbridgeinvesting.com. All right, everyone. Thank you so much. Thank you for spending all this time with me. Wow, a lot of people stayed, DJ. I thought people would get tired of me by now. All right, enjoy the rest of your day, everyone, and I'll see you next time. Thank you.